Hi there, eToro. It is Monday, the 28th of November, and that means it's time to take a look at what moved the markets last week. It was another fairly quiet week. We can see that the price action across the NSDQ100 and SPX500 from 2 Fridays ago till Friday last was small. The markets were up a touch on the week, and the market in China closed the week slightly down, although less than you would think given the turmoil that's going on there right now. US government bonds have been slightly lower on the week, and it looks as though certain durations are starting to price in something of a recession in the US right now. In terms of macro data that I watched last week, so there was some interesting PMI data out of the UK, so the numbers have been more resilient than analysts have thought, and this for some reason is a trend. When it comes to UK data, analysts tend to be more pessimistic than the actual data. And then in the US, we've got some really counterintuitive results. As an example, initial jobless claims are up, which is what the US Fed wants to see. They want to see fewer people in employment so that the employment market isn't as strong and wages aren't rising as fast. But then we also saw new home sales in the US come in quite a lot higher than was expected. The reason this is a surprise is because the interest rate in the US has risen very, very fast, and mortgage rates in the US are now very high, especially when you compare them to recent history. Despite this, new home sales in the US, as well as a few other macro data points, seem to be quite resilient. There's still a fair amount of strength when it comes to the US consumer. Now, if we look at the trend of this particular data set, we can see that it has been trending downwards, and then last week we saw this large pop. So what the heck is going on? It's one of those things we can only understand in any amount of detail looking backwards, so we'll have to wait and see. One of the biggest ticket items last week was that Black Friday set some e-commerce records, and this was not expected. I think everyone was expecting very weak demand, not only out of the US, but globally. There are some companies that I think have benefited a hell of a lot from the particular situation that we find ourselves in at the moment. And one of those groups of companies will be these BNPL companies, buy now, pay later companies. So in Europe, we have the likes of Klarna. In the US, there are a few more big players, one of them being Block, the company that used to be called Square. We'll find out the details of which companies were very successful through this period in the next quarterly earnings. But one of the companies that we know have been a big winner through the shopping holiday towards the end of last week is Shopify. So they've seen record sales through Black Friday, and the stock has popped quite a lot today as a result. Once again, we find ourselves with a data point that is counterintuitive. Central banks around the world are raising interest rates. Demand seems to be dropping off, and then once in a while it pops up again. There's a good lesson in this. There's a lag between when central banks take action and then the outcomes of those actions are fully realized through an economy. The second lesson in this is that macro trends don't travel in straight lines. They tend to be quite lumpy. So while the trend in GDP growth within many economies seems to be down at the moment, that doesn't mean that it's not going to pop up once in a while on its journey downwards. Another big ticket item from last week and continuing through this week, the weekend and this week, is that there are a rising number of protests within China with regards to ongoing lockdowns. Many of these protests have been stamped out so far, but it looks as though there's a groundswell forming. What will be the end result of these protests? I don't think anyone can call that. China tends to have an iron grip on its citizens, so I think that they could probably deal with these protests, but there is a chance that this pressure on the government might cause a change in policy. China is also a part of many, many supply chains around the world, and so this will create additional challenges beyond just the lockdowns. For example, I'm reading something on screen. There's expected to be a shortfall of about 6 million iPhone Pros this year because of these protests. Unfortunately, I think the most likely outcome is that China stamps out the protests and continues with their zero COVID plan, potentially in some watered down version. I also wanted to look quickly at commodities. Inflation in large part was driven by a rise in prices of particular commodities. More recently, those commodities that are part of the energy supply chain What I find very interesting and gives me some hope, particularly with regards to inflation, is that the price of oil is more or less flat on the year and has been dropping recently. Now, in part, this is because of the lockdowns in China and a perceived weakness in demand around the world, but this will really help inflation come down and hopefully make a number of the other things that we buy that depend on oil a little bit cheaper too. In fact, when you look at the year-to-date performance of a number of key commodities, it's only really natural gas and nickel that have gone crazy. The rest that I monitor closely are more or less flat or even now down on the year. Like I said, not very much happened last week, and I did give a bit of an update on earnings on Friday. So let's look at what's going on this week. It is a very interesting and important week when it comes to macro data. Looking specifically at the US, like most economies and economists are at the moment, we will be getting several forms of employment data out of the US. This is something that the Fed is watching very closely. We'll also get a reading on GDP for Q3 in the US. We will also be hearing from the Fed Chair Jerome Powell, and it's expected that he will talk about a slowing of the pace of rate hikes within the US. Following that, on Thursday and Friday, we will be getting more unemployment data out of the US, both on Thursday and Friday. We'll also get a core PCE reading. This is one measure of inflation, and the market will be hoping that this comes in even lower than the expected 0.3%. So there's quite a lot in terms of macro data out of the US that will keep the market on its toes. With regards to my portfolio specifically, we are still seeing earnings from a few companies. So EasyJet will report earnings tomorrow. I think EasyJet has used this year to set itself up to have a fantastic year in 2023 and beyond. They took on some debt, like many airline companies, in order to weather the storm through lockdowns. They did dilute investors in order to raise some additional cash, and they've used this money to invest quite wisely, I think. On top of this, the volume of travelers is getting back to 2019 levels, and I'm keen to get the details of the past quarter from that earnings report, or in this case, it'll be a trading update. CRM, Salesforce, will also be reporting earnings. I expect that they haven't had the best quarter, but they are a company that to some degree is recession-proof. I'm curious about what their forecast is for the coming year, but the last quarter of the year tends to be fairly good for them, as a number of their salespeople are bonused on closing deals before the new year begins. And then finally, we will see UiPath report earnings on Thursday. UiPath is a business software as a service company. They provide software robots to automate your business workflows. They've had some challenges because of the war in Ukraine. They are a company that was founded in Bucharest in Romania, so a number of their customers are quite close in proximity to the war, and so revenue has been affected as companies in those regions have reprioritized some of their spending. All right, that's it for this week. It's going to be a very interesting week in terms of the macro data. I'm very keen to see what comes out of the US. I hope you have a good one, and I'll speak to you soon. Goodbye.